Your Credit Matters segment today being brought to you by creditsanitizer.com. You have a credit report, it's wrong. They all are. What are you doing about it? Credit Sanitizer has these solutions for you. Tax tips for the 2022 filing season if you haven't filed already, or if you find out that maybe you missed something, you might be needing to do a amended tax return. If you're anything like me, getting lots of mail lately with, quote, important tax document enclosed, unquote. Notice on the outside of the envelope, when you've been seeing loads of ads for tax software companies. Yes, tax season is once again upon us. And while 2021 may not have been quite as strange as 2020, it still contained its fair share of unusual events which could impact your taxes. Before you jump into filing your return, you'll want to make sure that you're aware of the new requirements and opportunities that may apply to you this year. Check out these 5 tax tips for the 2022 filing season to help you get started. Number 1, reconcile your advanced child tax credit payments. When the American Rescue Plan passed in March 2021, it included some big changes to the child tax credit. While previously the credit was worth $2,000 at most in 2021, it was worth up to $3,600 for dependents age 5 and below and $3,000 for dependents age 6 to 17. The income limit to qualify for these maximum credits was $75,000 for singles, $112,500 for head of household, and $150,000 for married couples filing jointly. Unlike in prior years where taxpayers could only be refunded up to $1,400 per eligible dependent, the expanded child tax credit was fully refundable. Finally, families were able to receive up to half of the credit in advance through monthly payments from July through December of 2021. However, those that preferred to wait until they filed their returns in 2022 to claim the full credit were allowed to opt out of this program. Why would you opt out? The advanced child tax credit payments may have provided a much-needed financial boon to many families who are struggling through another difficult year, but they also added some extra tax filing work as everyone who received advance payments will need to reconcile them on their returns. By reconcile, we mean that you'll need to calculate whether you received too little or too much child tax credit through advance payments. The IRS generally based its advance payments on 2020 tax returns or 2019 returns when 2020 returns weren't available. But if any key factors like your household income or family size changed in 2021, it could impact the amount of credit you actually qualified for. If you received less in advance payments than your child tax credit amount, you can claim the difference on your return. But if your advance payments exceeded your child tax credit amount, you may need to push some of it back. This repayment would reduce your tax refund or increase the amount of tax that you owe. However, there is a repayment protection provision that generally excuses taxpayers with low to moderate income from repaying excess advanced child tax credit payments. To learn more about how to reconcile advanced child tax credit payments or to see if you qualify for repayment protection, go to the IRS FAQs. Sorry, I had to say that. Number 2, track down your missing stimulus check. In 2021, many taxpayers also received a third round of economic impacts payments, EIPs. This third stimulus check was actually the largest of all, $1,400 per person in a qualifying household. This means most eligible families of 4 received $5,600. Yeah, how's that feel to you now? As with the prior 2 rounds of payments, only taxpayers with incomes below certain limits qualified for the third stimulus checks. These limits were single filers, $75,000 to $80,000, head of household, $112,500 to $120,000, married couples filing jointly, $150,000 to $160,000. In the case of single filers, if your income was less than $75,000, you were owed the full credit. Above that level, the amount you qualified for gradually phased out until disappearing completely once your AGI reached at least $80,000. Similar to the advanced child tax credit payments, eligibility for the first stimulus check was based on prior year tax returns. But if your income decreased in 2021 or you gained a dependent, you may be eligible for more economic stimulus than you received last year. The good news is that if you're owed stimulus money, you can claim the recovery rebate credit on your tax return to receive it. But unlike with excess child tax credit payments, you will not have to repay any of the EIP, even if you would have actually qualified for less based on your 2021 return. Number 3, deduct some or more of your charitable donations. Did you donate to charity because charitable causes last year? If so, you should know that there were two significant expansions to the tax benefits of giving to charities that applied only in 2021. First, non-itemizers are eligible to deduct up to $600 of their cash donations. That's a big deal, as those who take the standard deductions are not ordinarily allowed to claim any of their charitable donations as an extra deduction, but they can on their 2022 returns. Second, itemizers are allowed to deduct up to 100% of their adjusted gross income through qualified charitable contributions that were made in 2021. Normally, charitable giving deductions are limited to 20% to 60% of AGI. The bottom line is a lot of taxpayers will either be able to claim a charitable donation for the first time or will be able to claim a larger deduction than usual. So if you donated to a charity in 2021, don't forget to take full advantage of these expanded benefits. Number 4, realize that hurricane-related losses may be deductible. Being that we're in California, I'm not going to spend too much time on that one. Number 5, understand who qualifies for the home office deduction and who does not. Now, when I was younger, my accountant said, do not take a home deduction. Big red flag. You want to get audited? Take that. It's not quite the case anymore. When the pandemic began in 2020, millions of us began working from home. And even though social distancing guidelines relaxed in many areas throughout 2021, that didn't apply at home. Many employers continued to allow or require their employees to work remotely. If you worked from home last year, you may have heard about the home office deduction or wondering if you qualify for this tax benefit. Unfortunately, the answer is probably no. Through at least 2025, only self-employed workers are eligible for the home office deduction. So this isn't a deduction that W-2 employees can presently claim, and even those who work from a home office every day. Unbelievable. But if you're a freelancer, maybe you should be, independent contractor, or small business owner, you should definitely consider taking advantage of this deduction for the 2021 tax year. You can claim $5 per square foot up to a maximum of 300 square feet. Learn more about the home office deduction. Again, go to the IRS. Bottom line, 5 tax situations explained previously are far from the only ones that may impact your 2022 filing season. Other notable 2021 tax changes includes the extension of tax-free employer student loan payment assistance, a lower floor for medical expense deductions, and an expanded child and dependent care credit. As always, my big suggestion to you, talk to your tax professional. And I'm going to say it. I've said it so many times, and I just ran into this just the other day, unfortunately. Your taxes need to be done in October or November. They are reported in April. But if you don't look at them with a professional in October and November, there's very little they can do to help you minimize your taxes. Now, if you're one of those people that likes to pay a lot of taxes, God bless you. I don't know why, but there are those people. But hey, the idea there, again, talk to your tax professional. If you don't have a 10-star tax professional, give me a call, 800-306-1990, 800-306-1990. I've got a bunch of them that people report to me that they really, really like.